All right, let's do this this roundup. As you may or may not know, I've been kind of like away from crypto and the markets in general. Actually, although I've been playing around a lot more in traditional markets just because bull market things. But I've been away from kind of the crypto space for a little bit of time. The chop's been detrimental to me. So step back from it. And I think the situation is kind of a little bit nicer in terms of where we look as of right now. I think today is a pretty good looking day, to be honest with you. I think this is a really good BTC daily, and we got 2.5 hours until it closes. So I'm going to record this video now with the caveat that obviously things might change in the next 2.5 hours, but here we are. So we'll start with BTC, and then we'll kind of dive off into the indexes, and we'll give that little traditional view as well, which is again where I've been spending the majority of my trading time, and still will be, I think, for the foreseeable future, despite some very kind of clear plays I may be looking to take on the crypto side of things. The kind of the focus is still going to remain on the traditional side for me personally. The markets are just too juicy there to ignore at the current moment in time. So I think the nice kind of area we're in on BTC here is basically we got like somewhere in this zone on the daily being a support region. I think that this cluster along here from basically mid-May to the 23rd of May is the best area that we have in terms of a local support region. And what we've got here is we've got the breakdown, the failure to impulse and move any further down, and now the recovery back above this level. So what we could end up with is we could end up with some sort of range over here where we get some boundaries. We either get this as a boundary here, or we end up at the top boundary over here. But we're in kind of like one of these regions that I think that we should be tapping into now. So either we get into this kind of 29.5 region, or we take it all the way to the 3040s again, if we're going to be range bound. Of course, the other argument from that is that we just continue higher from here and end up making fresh highs for the year, which I don't think is out of the question based on the way the charts currently look. I think this is a very good looking higher time frame picture now for BTC. And again, when you compare it to what we've seen in the indexes this week in terms of the strength being shown on things like the NASDAQ, SPX on Friday was very, very strong as well. And also being able to make the case for potentially the metal turnaround, debt ceiling, potential resolution this weekend as well. Lots of different factors kind of playing in, and also probably notably, I'm just getting carried away in kind of the bigger picture stuff here, but potentially the dollar picture also not really impacting anything to do with the risk markets, despite the dollar rallying. You would be fooled to believe that the dollar had been puking this week, but actually the dollar has been rallying in line with everything else. And so we've got a situation where basically everything has just gone up over the course of the last week, and BTC has put itself in a pretty decent position. So the simplicity on the decent position side of things really comes from the higher time frames like the 3-day. So everybody will know, my reliance on this 50 level here and bouncing off the 50. And we're just doing that again now. And more importantly, what we're seeing at this point in time, yes, 2 days, 3 hours left until the close of this candle, but we're starting to bounce away from that 50, right? So we're now starting to see impulse back to the upside, which is what we want to see when we're talking about resets here on BTC. And again, the weekly is in a great position. Tapped into the overextended, just about clipped into there and rotating back towards the 50 and looking as though it may impulse over again. And then that would leave the potential buyers in this zone frozen out. From the perfect retest at the 24s would be frozen out. And we stay here. So I think for now, this level here is proving the tough one, and Sol has another very nice level that we'll go into shortly, but this level here is proving the really, really key one at 26.7. And I think in terms of a localized bull bear zone, I would just basically base it around this figure. If we're trading above and we're holding this level, and what it looks like at the moment is this kind of fake out to the downside, I would be, very much happy in trading this for continued upside through this region. There's no problem at all with that. To me, this looks like a failure to break down, no impulse, movement 4 days back above that former level. Anything back down here now should be holding. So anything back down to sort of, the 27s, 26.9 should be holding, and therefore continuation back to the upside. Best case scenario is that this continues and makes fresh highs. slightly downside scenario as this continues within the range bound structure and we get some resolution at a later date. But for me, BTC higher time frame, very good after this weekend. And the same with ETH here. This level here has been the really, really tricky one. And this has been the 12-hour level that I've had mapped out. And we even had the close above, the immediate rejection and move back underneath, sweep down at the lows, and now just consistent grind up. Basically since Thursday, we've just been putting in green 12-hour candles to push us into another fresh high here. So even the ETH argument, again, you just make the basis here around the 1830s, you dip below that, again, you want to get out of it, and you don't want to get involved in the chop here. So it makes the most kind of, sense as well from that perspective. I think the market's put themselves in a very, very good position. Then we'll go to the Sol one as well, because the Sol one is very attractive on the weekly. So this is the weekly support level on Sol. It's the level that's been holding up week after week. And if you want to take the wicks and the recovery that we see, down here, then basically you've got, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. There's like 13 weeks of support in here, basically smack bang at 2015. We get the close underneath, and this weekly just closes straight back above again. It's like the BTC daily picture. That was the comparison that I drew earlier. So for me, even Sol looks great from a weekly perspective because it looks as though a failure. It looks as though it's a failure to break down, and a very swift recovery back above the levels. So with Sol, you would just set your kind of bullish bias or your bearish bias underneath this, let's call it 2020 level here. And that's it. Play it from that. But again, when these markets are recovering these levels, I'm very much interested in playing into that upside momentum than I am thinking about whether or not it's going to be another failure here. I think that actually the market had its opportunity to leg down. It's failed to do so. And therefore, this makes it an attractive upside play. So, kind of by proxy, what I'm saying is any market that you're going to be looking at is probably going to be more of kind of the bullish bias, and is probably going to be showing some bullish signs. Given that our three BTC, ETH, and Sol here for this example are all showing very strong kind of bullish patterns in terms of failure to break down of key levels, instant recovery from the bulls, and us looking for continued upside. So at worst, we're back inside the range, and now you're looking for either longing on any lower time frame retest to the bottom of the range again, so 2020 on Sol and whatever the relevant figure is on BTC, and I think ETH was 26.9 on BTC and 1830 or something on ETH. You're just looking at bidding those, and if they get lost again, then you're cutting, moving out the way, and we'll see what the market brings us. But I think the picture on crypto looks pretty good at this moment in time. I think it's actually a very, very good looking market. Then over to the indexes. The madness of people looking and shorting the indexes continues. It's really only crypto Twitter that can look at this chart and decide that it's worthy of shorting. Long position is very, very good now through this region here, and hopefully going to be moving towards higher targets. From this position here, yes, expecting some sort of cool off, some sort of consolidation. I think that we should be holding 13.2s now. I think that's probably an important level on the higher time frames to be holding if we dip back down. But this is still a very strong and a great looking higher time frame chart. The monthly is in a wonderful position as well through here, and the monthly's got 3 days left. Markets close tomorrow, so we've got Tuesday, Wednesday trading, and it's a great higher time frame chart. It really, really is very, very solid. We have just continued to push, further and further with the Nasdaq, and SPX joined in on this at the tail end of Friday. So, with a very strong 4 hour here at the US Open into the close. And I think from the higher time frame, obviously this is kind of the better looking chart because you want to play this as the lagger. But you're still doing a very good job here of breaking out of this potential monthly cluster here, just continuation. The monthly even looks great as it stands again with 3 days left of that, but everything looks in like such a good higher time frame position right now. I was memeing about moving this line down and taking it as a 3-day retest on this candle. I mean, it kind of worked out. Memes aside, it did all right. and the 3-day impulsing back into a fresh high through here. So even in the local region, I think you've got the most value on SPX, and therefore anything that falls under SPX in terms of looking at taking some of the value side from the stocks. Tesla, I think, is in a good position in that regard as well. So I think the weekly on Tesla, this is a monthly resistance point here, but if Tesla breaks through that, then it's a runner. And again, I think there's a lot of value on Tesla. If you look at where Tesla is trading in comparison to some of the other majors, I think this is in a really prime position to be potentially viewed as value through this zone. And I think the value obviously then begins, or the value argument begins to strengthen on closes above the kind of the 210s through this monthly zone. If it gets back above here on a monthly, and it may not be this month given the limited time that there's left to trade, it's a wonderful looking market that still is relatively decent around this bottom region. It is 2x up off the lows, but. And then the other one is Apple, and I think this is probably just the 20 IQ play. Like, this is just pure 20 IQ market condition play. That it's Apple conference next week, June 5th, June 6th, somewhere around there. Does that even fall into next week? Or is it the week after? Whenever. It's June 5th, June 6th. And I think just going for the highs, going for all-time highs on Apple for calls is just the easiest play, I think, through here. Just because the monthly sets up so nicely as well. We're just powering back towards that monthly high, and every time frame is basically set up to continue the drive. I think the only thing that we may get is some aggressive move, maybe conference time. Maybe something doesn't go to plan. Maybe the news is underwhelming. Maybe there's a delay in something. Maybe the AR VR push isn't what people wanted to see, but. Again, just 20 IQ logic. I think that any dips, you should just then be pushing for highs under these current conditions. I think that makes the most sense. Is just playing into this is basically the catch up on Nvidia. Now, it's not going to do an Nvidia, right? It's not going to be one of those that's like 30% up. It's not going to do anything like that. But I do think that it's gonna move into that all-time high spot. So I think that's like the 20 IQ play. And then the Nvidia play, obviously that one's kind of been and gone now. But this kind of just believing the trend and believing the path that we've been on has served very well. So this Nvidia monthly just absolutely ripping into fresh highs, and everybody knows about the situation at Nvidia currently. There's probably some good. Plays to think about around the Nvidia space, which I'll leave for Haven discussions, but everybody else can kind of go down their own path of working that out. There's some very, very kind of clean plays that you can look at taking, especially if you're looking towards where the value is based on Nvidia running. I think there's some very easy options that you can tag on to that. And BTC pushing hard into the open tonight as well. It's a really good drive here on the 5-minute. ETH lagging behind significantly today, despite seeing strength in recent weeks. Catching up a little bit now at 1866, but situation from my perspective, and we've done a little bit of like chart summary here, and I've given a little bit of my thoughts and my kind of process in here. Gold and silver, I think watch this week. I think they could be really interesting markets because, again, same situation as BTC. I tweeted this week to say this looks like it's going to drop off a cliff, and the same with BTC. And very often when the markets look as though they're going to drop off a cliff is the exact point they start to rally. When it looks absolutely cooked and dead and buried and like it's only a one-way trade, why would you ever get long on this? It's probably the time to long it. And I think that gold looks absolutely fucked, because it just looks as though it's going to fall down this side. It's going to tag into the low 1900s, kind of at best here, potentially even the mid 1800s again. Saying that, gold is now running, it's run everything from here. So it's run everything from March now. It's showing some signs of life. It's showing some kind of mid-time frame divergences. And again, resolution debt ceiling wise, unpicking the bones from that may be beneficial for the metals. So I think the metals are probably a very, very good one to watch for the week ahead, as they could see, quite a vicious rally in terms of driving out some of this some of this downwards price action through this region. So I think, the cleanest way you can look at trading gold through here is probably this. If you get back above this level, same as BTC and ETH and Sol that we looked at, just take the 4-hour level. If we start recovering back above 1955s, then you're probably a goer for a more aggressive push, and we'll see what happens. We've already had one test and rejection into this zone. So I think that's probably your easiest play. Now, where I was getting to in terms of the summary and just wrapping this up is I think crypto's in a good place. I think the higher time frame looks in a really interesting place for crypto right now. I think BTC is good. I think ETH is good. I think Sol is good. I think those level reclaims on all three markets are very easy triggers to be bullish on and be bearish on again if those levels are lost. And we are bearish on them to get ourselves out of the long positions, not get involved in the chop, and then also potentially to avoid any downside that comes from, thrashing around these levels. As of right now, based on the fact that the higher time frame levels were lost and there was very little impulse to the downside, there was no follow through on those breaks of support. Instead, the market has recovered back above those levels of support, or should be resistance. The option for me is long the retests, buy spot when we're above them, cut when we're below. I think there's a couple of very easy kind of, exposure plays you can have there. We've seen the indexes run. We've seen individual stocks run. We've seen generally equities having a very good time. And you don't want to miss out on that from a crypto perspective. We don't want to miss out when these markets start to take off as well, because we know that, the gains are far more significant on this side, except when you catch, one of the AI stocks in full flow. But right now, we don't want to miss out on anything. So I think for me, it feels as though it's kind of better to have an exposure point like we've got right now. And I think it's a fresh exposure point. Price is close to these levels. You haven't got huge margins here in terms of, you haven't got like a 15% stopping distance to some of these levels that we would consider as invalidations. And for me, it feels early. It feels early in kind of the play or the potential for the upside through here, especially given the technical significance from my perspective of the recovery of some of these levels. So I'm a bull. I'm a bull here. We've got it back above the levels. I'm bullish based on that. I would be happy to be a crypto purchaser in spot again at these levels. Would absolutely make sense to me because I've got a clean invalidation point. I know where I'm going to be wrong and out of the market. And like I said, that's to avoid chop or further downside. So I don't want to be holding crypto in choppy conditions. I don't really see any necessity to. I'll just take advantage of when the market starts ripping back upwards. And we may get that. These reclaims are very, very important for me. Good luck in the week ahead.